My dad retired at 40, and until the day he died at 55 years old, he always complained about money or not having enough of money.
Right.
And it was always an issue. And so I think I just formed this mindset of like, money's bad. Money creates division. And I think the reason I share that so personally is because I think we all come in with money baggage, right? Like, rather we observe that from someone else or we were taught that from other people. We have money baggage, and that was the moment where I think it really caused me to just reflect on what I was carrying around, because here was a guy who was trying to live his life for a great purpose, who wanted to help other people, who was on a mission to serve God and help others. You know, the one thing that he needed in that moment, he needed money.
Money for food.
It was just clear to me. I'm like, well, money can't be that bad if this guy needs it.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. I am so excited, and yes, I say this almost every time, because if I'm not excited about my guest, why the heck would I bring them to you? I mean, really, I'm going to bring somebody I don't like. I'm going to bring somebody I don't trust. I don't think so. The whole purpose of this podcast is both to educate you, my listeners, but also to be able to bring more people to me in my network so that I can expand my network. Because networking, and I say this probably every single podcast, networking is one of your fastest ways to being able to grow your success, and how you treat your network is how you grow your net worth. So if you act in integrity, kindness, and direct and authenticity, you're going to grow a network that supports you in the same character and in the same way. So I bring you Ellis because I think he is one of those people. In my conversations with him, I met him through Bronson, through my Phoebe Pasadena multifamily meeting. He came and presented, and I loved it because at one point he kind of cornered me. Now, it wasn't meaning to corner me, right, Ellis? You weren't meaning to corner me at any point. But he kind of cornered me and went, hey, what's your story? And he even said, what's your faith story? And the reason why I say that outright is because you guys probably know, you've seen me on other podcasts go, you don't have to be a person who believes in a particular God, goddess, particular faith path to be a good investor in real estate and to have a high level of integrity. But many of us are. And so I'm going to bring that forward just straight up here. Like, I'm a person who definitely believes that my life is led by grace, by spirit. That is my focus. You can believe in Jesus. You can believe in Buddha. Help yourself. It's all good. But are you walking a path that leads you towards fulfillment and having a sense of purpose in your life, doing things that are good for yourself and for others? That's my suggestion. All right, so I'm just going to lay that out so Ellis has perfect permission, right? So let me read Ellis's bio here. It's going to take me a minute. Let me see. I'm going to share my screen so that you guys can see, right? There's his website, Symphony Capital Group, and I'm going to read you a very short bio. Through Ellis's vision and leadership, Ellis has led Symphony Capital Group through the acquisition of more than $87 million of commercial multifamily real estate in 2021. Yes, we said 87 million. That gives you a sense for his level of expertise. He's also the founder of Kingdom REI, a mastermind and coaching community for faith-driven real estate investors who want to multiply their real estate portfolio, income, and impact through joint ventures and collaborations. Ellis's career began as a full-time college pastor. He saw, firsthand the need for marketplace leaders focused on creating profit to support impact ventures like his own. He began purchasing real estate in 2018 and began to build a team to support his growing portfolio. Ellis has a growing audience of investors and entrepreneurs all across the country. He is the host of the Kingdom Real Estate Podcast and the Future of Real Estate Podcast as well. His social media accounts receive thousands of views every day. How do you do thousands? I don't get thousands. I'm just saying thousands is pretty good. And he's spoken on real estate stages across the country. And now he is here today to speak with us. Ellis, welcome. I am excited to have you here.
Yes, thank you. I'm pumped to be here. I really am looking forward to this episode, and just because I enjoyed our conversation, and I appreciate how open and honest and transparent you were when asking when I asked that question. And honestly, it just came out of such a good heart, and I just loved your story too. And so, anyways, I know that this is going to be a really, if not anything, entertaining episode for your listeners. So I'm looking forward to it.
All right, give us your background now. So you went from being a full-time college pastor, and I like your story because I think it's good. And I'm gonna hijack you here for a minute while you're, it's good. I'm gonna hijack you here for a minute.
Okay.
So the full-time college pastor, one of the things that I deal with when I deal with my clients, whether they're people of faith or whether they're people who simply believe in being good-hearted, is that people get complicated around money, right? They don't embrace this topic called money is part of our physical world. It's okay to be engaged with money. It's not about money unto itself. It can be about abundance, right? I live a rich life, right? Living a rich life can be money, but it can also be, and my focus is abundance. So faith-based, full-time college pastor talking about money, because that's what you're raising money for. So take us from there.
Yeah, it was very, my journey was really interesting. And so, I think most people, this is a Tony Robbins thing where they say you're either running away from pain or you're running towards pleasure. And I think my story is really similar to that. I was a college pastor. We were raising 100% of the funds that we needed to support our nonprofit, our ministry here in San Diego, California.
Right.
And I've been doing that for several years. We had built a large team up to this point of about, 12 to 15 staff. We were fundraising for all of those folks. And I remember about 4 years in, one of those young men that we had hired came up to me one day out on the lawn of San Diego State and really shook. And this was not a guy who was ever shook, like happy, upbeat, really fun guy to be around. And I said, "What's wrong?" And he looked at me and he said, "Ellis, I don't have enough money this month to buy groceries." And it just completely changed my mission of what I thought was important in the world. And it really changed my mission. And I realized at that moment, I think up to that point, I'd really kind of went away from money. Like I didn't want anything to do with money, mostly because I had seen what money did to my family. My parents divorced at 10, and that was always an issue. My dad retired at 40. And until the day he died at 55 years old, he always complained about money or not having enough of money. Right. And it was always an issue. And so I think I just formed this mindset of like, money's bad. Money creates division. And I think the reason I share that so personally is because I think we all come in with money baggage, right? Like rather we observe that from someone else or we were taught that from other people. We have money baggage, and that was the moment where I think it really caused me to just reflect on what I was carrying around, because here was a guy who was trying to live his life for a great purpose, who wanted to help other people, who was on a mission to serve God and help others. The one thing that he needed in that moment, needed money.
Money for food.
It was just clear to me. I'm like, well, money can't be that bad if this guy needs it. And so that's where I say my mission really changed of I am going, and I made a decision that I was going to become wealthy, and I was going to at least figure out how to build, create, multiply wealth so that there was never a shortage of that. And that's what I've learned since then, that, financial education is the key to unlocking abundance. It's not, money doesn't have to be evil. Like I think it's really interesting. I think the middle class actually serve money way more than the wealthy people do. And I'll tell you why. It's because they don't have the key. Like they think money is a limited resource, where the wealthy realize that money is something that is tied to value, and there's no limit to how much value we can bring to the world, right? And so I think the middle class serve money or make an idol of money way more than the wealthy do. Because they don't know how to create it, they don't know how to protect it, and they definitely don't know how to multiply it. And so that has unlocked a whole new world for me.
I have to agree with your description. It's because what generally forces people into this serving money, right, is this act of making it your God, making it your focus, is usually fear, right? And not enough, deprivation, I won't be okay. And it takes money and it connects it to instinct. And therefore, it almost like it becomes the God, because the instinct underrides so much of our will and our grace and our willingness to just keep our eyes focused on a greater good. If our instinct is busy, lizard brain is busy going, you can't do that. We need money. We got to spend it. And so it connects it to a part of our psyche that maybe doesn't actually serve us in fulfilling our greater purpose, our greater integrity, our greater sense of will, and being at, some would call it surrender. Like that's, a lot of the Christian religions, it's surrendering to a greater purpose. To me, it's fulfilling and embracing, like acknowledging that there's a freaking greater purpose that you have on this planet. Let's get to it, right? Let's get to that. And that greater purpose is an allowing a flow in your life to be able to keep stepping forward every day in service to the greater purpose. It doesn't have to be in service to God. Some people, I think, get confused, right? And that, in my mind, they get confused. Your greater purpose is defined by God. So serve your greater purpose, right?
Yeah.
So for me,
100%. I love that. I think that's right on. I think that's where we begin to really align with something bigger. And I do think, it's the reason why I think most people play small. I mean, is because it's not tied. Like no one's dreaming big enough to really do what it takes or take on the sacrifice of actually accomplishing anything worthwhile, because there's nothing connected to that. So I think that's so right on.
Well, thank you. I feel like I'm, maybe if we weren't talking about you today, I would tell you about something I'm in the middle of.
We can flip the script. I'm sure you're a lot more interesting than me, but we can.
How about we just call it equal? How's that?
There
sound?
we go.
Let's just call it equal. So let's get back to, so we talked about money, we talked about people's relationships with money, we talked about being faith-based, and that money and faith-based do not necessarily have to be mutually exclusive, not in any way, shape, or form, right? So, but they sometimes are. So let's move on to your pasture, you decided that you really were going to get wealthy, that you understood that money and being good is not disconnected, that you can do the two together. And so now you're part of Symphony Capital. So tell me more. What does Symphony Capital do? What's your guys' niche, and where do you really rock it? Like, what can people really count on?
Yeah. So, just to speed things up really rapidly, I'm no longer in full-time vocational ministry. We began to kind of transition out of ministry. We actually bought our first deal while I was still in full-time ministry, bought our second deal when we were in full-time ministry, and then began to kind of spend about a year in transition of realizing, to be honest with you, I'm probably a better entrepreneur than I am pastor. And I see that I can still find ways to live out my faith and serve God in this realm too. And this is what I'm actually passionate about. I think it took me several years to figure that out. So we started a company called Symphony Capital. We are a multifamily focused investment firm buying pretty much wholly value add apartment buildings across Texas. We've bought in several other markets, but right now we're really focused in that market, like a lot what's going on there in that story. And we're a traditional value add firm, meaning like we're trying to get the highest return for our investors in the shortest amount of time. And so even though most of the deals we buy that are stabilized, they do cash flow, we're not necessarily focused on early dividends. What we want to see is some type of capital event, a return of principal within that 2 to 3 year time frame. And then we kind of assess at that point, is this a deal worth holding on to, where we then can deliver dividends to our investors, or do we look to sell this asset? It's been a really good time in this market to sell those assets.
Yep.
I think we're moving into a time where probably is going to make a lot more sense of achieving that value, looking to get a portion of capital back to investors so that they can again place that in other deals or more deals with us, and then holding a bit long term. But we'll see what the market gives us. But that's essentially kind of where we're at today.
Perfect. And we'll talk about the market a little bit later. We've decided. So, so we'll go there. But right now, let me stay with this for a minute. So what is it that you guys sort of feel like your guys' winning formula is? Is it the asset class you're in? Is it the value add? Is it the buildings you choose to buy, their level of deferred maintenance? Like, what is it that you guys feel like is kind of like your ideal property?
That's a really great question. This has changed as we've grown as a firm, and we would buy kind of heavy value add Class C deals. We've bought several of those in Midwest markets like Kansas City. But, we spend so much time on those deals, like turning over bad tenants. And I say bad tenants, like they're bad tenants. Like it is what it is. Like they don't pay, or they don't treat the property well, or they're, they have criminal records, and they, they're just not fun to be around. Like spend so much time doing that. and there's meat on the bone there. But I mean, I think the purpose of like owning these assets for me, especially with my background, is like we want to have an impact with the residents that are living there, right? Like we want to truly not just bring value that creates revenue, but value that transforms lives. And so we're under contract right now on a deal in Dallas. It's a mid 80s vintage. You know, you could almost argue though that kind of is like a Class A property. There are units to renovate to kind of, you know, to essentially increase revenue on this deal, which we will definitely do, and we'll increase rents across the portfolio, but not in a way that outpaces the value that we bring to that community, and not in a way that, you know, makes us not competitive with the market. And so I think that's important to know. But I would say our ideal target is that it's an asset that we would potentially want to hold for longer, right? For 5 to 10 years, but have the ability in the first 3 years. Our whole goal when we're looking at deals is we want to be able to increase revenue by 30% in the first 2 years. Okay. And that allows us some type of capital event at, you know, upon stabilization in year 2 to either refinance or sell that deal. So that's what we're looking for. But again, I would say we're moving, kind of going upstream into nicer deals, mid 80s, 90s vintage. It allows us to do really cool community programs. So in this deal we're doing in Dallas, like, you know, we already have a schedule of events of like Saturday morning or burrito mornings, right? Where we'll do that. Like we have a Bible study group planned on, you know, Wednesday evenings. We do different community events once a month to bring our community together and allow people to build relationships and connect to one another. And so, you know, that type of asset, even though we have some type of rehab plan, we are raising rents, it still allows us to, I think, really serve the community and create what has always kind of been what I love to do, is help build and create communities and see people's lives transform, both through relationships, but also through, I mean, just to say this openly, like the sharing of the gospel. Like that's what we do across several of our community, or want and plan to do across several of our communities. So that's kind of our bread and butter.
I love it, because community to me always, there's so many elements in real estate that are like this. Community to me is a good thing to do. It's beneficial to the tenants that are there. It adds a sense of safety. It adds a sense of loyalty, a sense of safety, a sense of feeling good, right? But it also helps your bottom line, because it adds loyalty, and it adds, people will recommend that good quality tenants of like-mindedness will want to be in that particular community because it's their friends. And so it adds to this loyalty to the bottom line of not having to turn tenants over, not having to market so hard, having, you know, having less damage while the tenants are actually there, because the working in community actually creates this sort of financial success. And to me, that's exactly I want to shake with it. Like that's exactly what is the perfect point between being a good person and making money.
Yep.
Like there is absolutely this crux over
and this is exactly what I was talking about, wealth creation. Like this is why I think it's so interesting, you know, that we have this idea that money is evil. I'm like, you don't get to having lots of money unless you've created massive value for the world. And I know there's this skeptic sense in everyone's mind and heart that we think, we look at the rich and say they got there by doing corrupt things, or but I'm like, that's so the few in my experience. Like, yes, there are plenty who do that and maybe get there and kind of turn away from the world. But for the people that I know that have built wealth in their lives and building lots of it, they've provided an incredible amount of value to the world. And I think, you know, once we disconnect, that is where we go wrong. But like, typically that is the wealth creation formula. Like you bring enough value to people in an apartment investing, like we're going to raise rents. That's how we make money in these deals. But we're going to tie that to value. And I realized over the years that people are willing to pay more when you bring value to their community. Like we had this deal in Kansas City, for example, primarily Hispanic community. And I had several investors saying, well, your plan is to go in there and renovate this whole deal. And what about the people living there? I'm like, just work with us. I'm telling you, people are going to leave, but a lot of people are going to stay. And literally we were renovating units knowing that the rent was going to go up $300 or $400 a month on this new renovated unit. And we would have people living across the hall who would come to the leasing office and say, hey, whenever that unit is finished, can I move into that? like I'm ready, you know, like I want that because it's safer, it's nicer, it provides a better place for our family, and I'm willing to spend more to be able to be there. And so, you know, it doesn't always mean that just because you're raising rents, people can't, like, that's not the case. We typically are buying stuff that is affordable, that people, you know, it might be a little bit more, but they can still afford it. And people want that. And I think that's important to realize across any business.
I think people do want that, and your quality of tenant. Again, like the tenant gets more value out of it, but you get also a tenant that wants to be loyal. They
100%.
want to stay. They've declared they want to stay in the community, and you can support them staying in the community. And so again, that's another crux of a win-win. It's of service, and it brings financial value, and it up levels the entire community. So,
and since we're speaking to real estate investors and people who are buying deals, guys, quality of your tenant base, if you want to be in this game long term, is like so key to picking deals.
Yes.
And
yes.
it just is like quality of tenant base. It's such a criteria of ours now. And so, you know, we've done across the spectrum, and quality of tenant base is by far a really important criteria for us.
I started in C-class units in workforce housing in Los Angeles. And I very quickly discovered that there is this, you know, you can have several very good tenants, but you have a few tenants that are really tough, and you can start having this difficulty with the building. And now years later, tenants, tantrums, toilets, trash, teenagers, you know, continue the list of T's. Not that I don't like teenagers. My daughter's a teenager, but there's a whole list of T's that comes with a certain level of workforce housing. And it's always there. But if you're in a different quality of tenant, then all that tenants, toilets, trash, tantrums, teenagers, all of that starts to disappear because they start taking care of it themselves. Within the community, take care of what would be difficult themselves. So now what I do is I do Airbnbs because I completely distance myself from the C tenant all the way through to the medical based or the traveling business tenant. I don't even do vacation rentals. Right? I do literally short-term rentals or extended stay rentals because I see the quality of tenant makes my life so much easier. I'm still serving in that nurses need a good place and safe place to stay. I am still being able to offer a sound home that has lots of amenities for them. So hopefully they have a quality experience. They can focus on their purpose in their life, what they're for, right? But they also treat it with a certain level of respect so that when they leave, I can repair anything that needs to be repaired. And I have the next offering is clean and fresh and ready for the next person, right? So therefore quality of tenant, my way of controlling quality of tenant was not to go to my quality of tenant was short-term rentals, extended stay, right? So,
which is a great business model. But we actually own a 20 unit apartment building that we bought. We're completely renovating to move to short-term rentals, and we'll see how long we stick with vacation. But I think the backup plan could definitely be kind of extended stay type stuff for traveling nurses. I think it's a great sect. It's a growing sect, and it's definitely something to pay attention to.
Yeah, I get construction teams, construction crews that need to be housed together, that are there temporarily, traveling nurses. People are there for internships. People who are hired as like engineers temporarily to work on certain projects at another location within a larger company. And they're all lovely people, and they all they're working, but they're treating the place with a different level of respect or expectation. And a lot of them are more, white collar and not so much blue collar. It's true. Right. So, okay, moving on. So one of the things we thought we might talk about a little bit was raising capital, because really what you're the expert in the company is the raising capital piece. And it's to me, raising capital always boils down to the same basis that is true of almost anybody in any field: know, like, and trust. Right? Know, like, and trust. And so raising capital has moved from how do you do your, force a close, to how do you use neurolinguistic programming to make people buy, to know, like, and trust, right? In my world, right? So why don't you talk a little bit to that? Because that's really what you do, is you raise money.
Yeah, it's so important to, I think in this space, and this is what I was just forced to learn, because I came in this with a just eagerness to buy bigger deals, like realizing a duplex was never going to serve me and my family, right? Like this was never going to get us to where we wanted to get to. And so I knew we had to go bigger. Well, the problem is when you're a college pastor, your entire network is 19-year-olds like that are all in debt. You know what I'm saying? Like
That's true.
You're going to have to go build a new network.
Yeah.
And so I just, I had to learn quickly how to market to these folks. Like, and here's the problem. I didn't stand a chance against the Christina Suters of the world because I didn't have her experience or track record in this industry.
I haven't had it for a while, and that does help a lot when I talk.
So if you and I are standing on stage together and they're saying, well, why should I invest with you? I'm not going to talk about my experience or track record next to you because like, look how much more you've done. But I realized that early. And so I realized, okay, well, then what do I talk about?
Yeah.
And what I've found, exactly what you said, everyone, if you're listening to this and you disagree, then you're just go back and look at your decision making. People are emotional creatures, meaning we make decisions with our emotions and then we justify with logic. And so I have almost never, it's why I even get on the show. We have a value add strategy. We do fine for our investors, but who I'm attracting is people that want to do more with their investing dollars, who want a triple bottom line on their dollars, meaning they're more interested in than just what happens to their dollar. Like, what is that dollar doing in the community? What is it doing on the people that we're investing alongside of? And I think for anyone, you don't have to go spiritual, but you do have to have a niche, and you do have to speak to a specific avatar in person. And this is just business wise, but it also applies to capital raising as well. And that, you really want to speak to a particular avatar or type of person. And for me, that's always just been the faith-minded person because that's my story and my background. But I teach and know other guys that, might speak to people in tech sales, right? People who are in solar sales. They'll speak to dentists or doctors because they know that and all of those types of people have certain problems. The guy who's in sales has a much bigger problems or different problems than the doctors, right? And so, but you have to know that really well so you can speak to that. You can create content around that. You can become the leader in that, and that is really the fastest way to build as you kind of climb up that ladder of know, like, and trust. And so that's what we've done. Like, a lot of people don't know me, but a lot of people do know me in the kind of the world of faith and investing because I'm one of the few voices that are just creating 100 pieces of content a month around that. So you asked me like how I get 1,000 views on my social media. It's because I create 100 pieces. Like, that's not a whole lot of views if you create enough content.
That's a lot of pieces, dude. I mean, come on. I have a hard time creating one piece a day, and that's only 30. I don't even do it anymore. Like, I tried creating 30 pieces. Oh my God.
Yeah. So I take a whole day. I spend 8 hours one day. I hire a video guy, and we go in and we'll shoot about 80 reels, 80 short pieces of content.
Yeah.
And then we'll create about 3 to 4 long-term videos for YouTube. And then I record about 2 podcasts a week to kind of keep things in the pipeline. And that's essentially what we do. And I mean, we just and that goes everywhere. That's on LinkedIn, Facebook, Instagram, podcast, YouTube, right? So we cover the market. And surprisingly, it doesn't take, I don't spend all my time creating content. I do spend a lot of time creating content, but it's scheduled, it's concentrated, it's mapped out, and then my team takes it and we just pump it out.
Yeah, it's I love it. I'll talk to you about that some other time.
Yeah.
Okay, we'll go deep on that because I stopped creating as much content and now I'm looking at maybe doing it some again, but I got to do it differently. It's the way I was doing wasn't working. All right, so we talked about in this changing economy. Right? You're in the middle of a deal right now. And let's, this is 2022. Let's timestamp it, right? This is July of 2022. So if anybody wants to go back to this in 5 years, this is your timestamp, right? This is what's happening on the street right now is that we have the Fed aggressively increasing interest rates. It is shifting the real estate market as we know it. And it's going to probably continue through the end of this year. So what are you running into? What is the news on the street about what's happening now? What do people need to know now?
Yeah, and we're waiting today. I mean, hopefully we know maybe by the time we get off this podcast show what they're going to raise the rate to today, right? Some people say
Mhm.
75, some people say 100. Heck, they might surprise us and go crazy. For my sake, I pray that they are just going to leave it alone.
We're not
Even
going to leave
though,
them alone, Alex. I'm
at the same
sorry.
time, I'm like,
We're
just go ahead
not.
and rip the Band-Aid off. Just do this thing 100 basis points and let's just move on. Or let's just go to 200 basis points and not talk about it anymore, right? Like, because
Boom.
I mean, this is really, really difficult time because interest rates have moved, historically fast. We're talking about now, let's see, almost 200 basis points, most likely 300 basis points after today in about 3 months. Like and if you're trying to buy a single family home, right, this, like interest rates went from 3 to 7 real fast. And this is a little bit different than like COVID was also one of those really difficult times where the debt market just dried up, like people just
Yeah.
stopped lending, like which would have made deals impossible. So that was, I'm not saying comparing this yet to that, but I would say it's similar, because if you went under contract on a deal 2 months ago, your cost of debt has gotten a lot different. And it's not necessarily even the cost of debt is that much more expensive, because we can purchase a rate cap, right?
Mhm.
Like the lender is going to require us to purchase something that limits our debt
Mhm.
or our cost of our debt, which we would underwrite to that in the beginning. What's more difficult with the rising increase of interest rates is most equity and debt providers are looking at your stabilized value and saying, well, your cap rate is going to be 100 basis points even higher
Yep.
than what you thought it would. Like even and so for people listening, when we underwrite deals, we're having everyone projects, in order to get your stabilized value, an exit cap rate, right? So your typically rule of thumb would be like 10 basis points a year for every year. So that would mean if you're saying you're in Dallas and you're buying today at a 4 cap, you're saying, well, conservatively, we think it's probably going to stay the same, but let's just underwrite to an exit of a 5 cap. That's about 100 basis points. That's ultra conservative. That's in 5 years.
That's it. Yeah.
Today, in 3 months, people just move that to 5.5 based off
Right.
of just the environment. Meaning, what you thought you were being conservative over a 5-year basis, let's increase his 100 basis points, would be extreme. In 3 months, people are like, it's 550.
Mm-hmm.
So now try and go get equity or debt on a deal that you thought you were being ultra conservative on, right?
Mm-hmm.
And now you're like, so just giving people one, this is, I think, I'm seeing a lot more deals come back to market, seeing a lot more listings that we were going after those deals. They're back on the market.
Mm-hmm.
That got tied up. So that's happening. So a lot of deals will fall out of contract. I've seen a lot of retrades in the market. And I'm seeing discounts on deals that we looked at 3 months ago that are now 15% below. The seller's willing to accept 10 to 15% below what they were three
Okay.
months ago.
Right.
And I think a lot of that is a lot of the way the deals were trading 3 months ago is there was kind of a trend. There was you're projecting the trend of like you're paying for where the market was going, to now people have no idea where the market is going. And so you're not paying for the trend. Owners are just trying to get their equity out. Like if they have equity in deals and they want to move that equity other places, or maybe even take it off the table, that's what they're trying to do. And so it's just like, let me just take my equity and you can have the deal. And so I do think there's opportunities for buyers in this market. I mean, we're still making offers. And what's interesting, as I speak to our brokers today, they don't really even know where the market is. So they're like, please give me an offer, because I don't even know how to price this deal right now. And so I think it's a great time to make deals, but it's an incredibly difficult time to get deals done.
Done.
And, I think before you go make offers or put up hard money, you need to be really in conversation with your debt brokers to know where debt's trading. If you're going to be taking on JV equity, more like institutional equity, which is some of the groups that we work with, it's really important to know what their metrics are, in terms of cash on cash, in terms of kind of stabilized yield is what we would call that. Like all of this has changed within the last 3 months. So even if you're an active investor listening to this podcast show and you haven't done a deal in the last 6 months, like, I'm just letting you know, you better come in freaking swinging, because this is not the same market that it was even 4, 5, 6 months ago. And so I just want to prepare people for that because of just how fast things have changed just due to the rising interest rate environment.
So, so many stories come to mind, but I guess the one that I think that's probably the best story that teaches the most is I learned years ago, because I used to do single family flips, right? I've done it twice in my life. I prefer rental units, but I was doing single family flips as well. And which is a different market from multifamily. Okay, let's get really clear here. I may have been doing this for 35 years, but I don't know that my sophistication level is any greater or less than yours because you've been deep in the multifamily unit
Yeah,
market.
and it's specialized, right? And we're specialized, yeah.
Right. So here I am doing single family flips, and what I discovered very quickly in the downturns, like there's an upturn and there's a downturn, and here I am. I'm trying to sell, whether it's a long-standing property of mine or whether it's a flip I've just done. I have to price as soon as the market becomes uncertain. I have to price 3 months worth of discount into my price before I even go to list it. So I have to take where my standard comping, where are prices today. If I were to list it today, what would be what would be competitive in the market? Forget that. In an uncertain market, I just have to take that and go, I'm going to assume where it's going to be in 3 months, and that's the price I'm going to put out there. Because by the time all this flows through, whether it's somebody who's made an offer this week, they're expecting that in 3 months, it's going to be worth less. So I have to bake in that discount from the beginning in order for me to get a solid offer. Like somebody's like, yeah, I want to buy it and I'm committed to buying it. I have to bake that in from the beginning. Because if I have to wait 3 months, if I wait 3 months to let the market prove itself, which is what I normally do, you put it out and you let the market prove itself, right? Does the market accept it? Does it not accept it? 3 weeks later, you lower the price, or you have an offer, right? First 3 weeks, a month decides what's it going to be. Right? I'm like, I don't even wait because I don't want to wait that long. The market's going to move even more in that 3 weeks, in that 4, and now I have to go another month or two of discounting. So I've just learned to accept it. I am not the decision maker in the market. The market is the decision maker.
And I'm telling you, it's a good lesson. I think that, we're learning, a lot of early investors are learning, right? And a lot does have to do with the tide. I think Dallas is probably one of the best multifamily markets in the country. There's still an incredible story of rent growth. There's a huge disequilibrium between supply and demand. We're always going to be occupied. There's always going to be the ability to find tenants. However, even though, and that's why I say, like, if this is happening in Dallas, you can imagine the pain that's being experienced across other markets. The air is being sucked out of the capital markets right now. What's different though, what's interesting is why I want to just say this. I still think there's great opportunities. Like, what's different about like this in 08 and 09 is that the capital dried up. There's still an enormous amount of money in capital. Yeah, but there's still.
I was doing deals. I literally had. I was in the middle of a construction project, and Lily was like, "Yeah, no," and I'm like, "What?"
Yeah, no money. Exactly. People were over levered, and then that got deflated, and then the money was gone. So it's very different today, where that's not the case. Still a lot of equity. There's still a lot of money. People have that, but again, they're just pricing, into your point, a much worse economy than I think we're going to get to. We don't really have clarity on the Fed on how, is this going to slow down inflation or not? So I think until we kind of get some clarity on that, that's going to be this. I think we could very quickly come back to a very strong market, which is why I think if you're betting on that or you follow that closely, then you begin to see the trend of like, hey, I think this is going to stabilize. Interest rates are going to start to slash that and come back down. And there's still discounts out there in the market. It's time to buy because you can get some great, you're getting great discounts right now, what I think to be great product. So, and there is money out there. Like, there's people that want to invest. There's plenty of firms taking our calls, but they, again, they're just pricing in a much different market when we go to exit than they were 3 to 4 months ago.
You made two distinctions I think that are worth highlighting. One is there's a difference between, is it a good time to buy and can you finish the deal? right? Like people are like, oh man, it's a horrible time to buy in 2009, 10, 11, and 12 in everybody's opinion, but actually it was a great time to purchase, right? Because there's actually a lot on the market, but it was hard to do the back end, to do the execution, unless you had somebody who was willing to have faith in that market, right? Same, now it's the same thing. It's like, hey, as prices soften, there's going to be units out there. People are be willing to sell at a lower price. Nice time to purchase, but you have to be prepared to deal with the back end.
Yep.
Right. And whereas the other side is, hey, the market's going great. It's impossible to find something, but the stabilization, the financing behind it is all solid.
Yeah,
right.
exactly. It's a catch-22, right? It's
exactly.
like,
that's what I'm getting at. Exactly. It's the catch-22.
I mean, that's why in some ways cash is king, right? And it's like I do believe cash flow is king too, but at the same time, like in markets like we're in right now, the actual reality is cash is king. Because if you got cash, you can do stuff that a lot of people can't right now. And that's really key.
Yeah. And the second distinction you made, I can't remember what it is. If I remember, I'll get back to it.
Yeah.
All right. So let's move on to the next question.
Rewind, people.
Rewind. It's in there somewhere. There was another distinction you made that was important. But let's move on. So the next question really has to do with, well, what is it like? Real estate's great. It can totally like excite you, give you a nice big paycheck. It can support your family, and it can do what it's doing now. All of a sudden it becomes really squirrely and deals become really hard to execute for whatever reason. And in that, you can have a deal fail. And if you've been in real estate long enough, and you have now been in real estate long enough, like those are our learning lessons. That's our learning curve. And that's when you decide who you're going to be and how you're going to be in the field of real estate. So tell us one of those stories that was defining for you. It defined either your relationship with real estate, it grew you up. What did you learn?
I mean, I definitely think this is one of those seasons. Like, we'll look back on this when we survived this, it'd be like, that was, we were doing deals in one of the hardest markets in the recent decade. There's no doubt about it. So, but I would say even before that, and I don't know, so this ties to real estate per se, but I think but what we're doing is putting together deals. We're entrepreneurs, right? Like, that's we're business owners. We're putting together deals. And so I think a lot of those experiences can be similar. And I remember about 4 months after I kind of transitioned out of pastoral ministry and I was now a full-time entrepreneur, Eat What You Kill. And, we have a mastermind and we were kind of selling, membership into that. And I remember when I launched it, my first 6 people joined, and that what kind of gave us our runway into, as we're buying more deals, those things money doesn't come right away for that. So we kind of needed to create a secondary product. Mm-hmm. And so we did, and it went really well. And then about 4 months in, I realized that money's about to go away. Like, I've used that money. Like, I had to pay myself. I had to pay expenses.
You had to eat.
And no one else was paying me a paycheck. And I remember looking at my bank account and realizing I have 60 days. 60 days of runway. And so I was like, okay, it's time to create second offer and go to new folks of people that I've kind of been building, relationships with. And I went to them, and it was right during COVID. I launched our company. I became an entrepreneur full-time January 2020. COVID hit April. Okay. Yeah. So the whole world was going to hell in the handbasket, right? It was nuts. That was the exact time where I ran out of money. It's like, that's when I needed to make my next offer.
Yeah.
So everyone was like, no, dude, I'm just not spending money right now. No, dude, I'm not
spending money. Don't know what's going on. We don't know what's happening.
Right. I'm not spending money. And I'm like, well, I need someone to spend some money or I'm not going to have any.
That's right.
And literally that was one of those moments. I literally was like, I'm so screwed is what I was thinking in my head. I'm literally like laying back here on my back, praying, thinking like, what do I do?
Yep.
And that's when I think that small voice in my head, just said, Ellis, don't give up. Like, this is a turning point. This is what's going to separate you. This is what makes good entrepreneurs, is those who are just willing to not give up, be persistent, and then pivot a little bit. And so I remember I called up a buddy of mine who was a partner with me in that business. I said, hey man, we got to come up with something. Like, we got to change our offer. I got to do something, or we're going to be freaking flat broke in 2 months. And so we just changed up our offer, and we essentially kind of created a trial offer that allowed people to come taste or give a test of what we were doing at that moment in time. And I remember I'd called that same day or same week, 8 people, and 8 people said no. And I called the same 8 people. I didn't have anybody else. Like, I just called the same 8 people, and I gave them the new offer, and 6 of those 8 people said yes. And that was when a light bulb came on. I'm like, I can do this. Like, it really is about like will and grit and, being willing to pivot just a little bit, but more than anything, just not give up. And I think right now in this market is kind of where we're at. Like, we may take an L, like, but we're not going to give up. I mean, because there's going to be a lot of firms that will have this experience and give up, and it's going to make our job a lot easier coming out of this when there's a lot less people to compete with. And so I think that's a story that really resonates with me. I think back to that, and I think we're in one of those times too. Which interesting, that was a different company. It was a different group of people, where this is kind of a different company and a different group of people that I think some of those, my partners on that, haven't experienced that yet. So in some ways I'm like, it's a good moment for us, actually. Right. And I'm like, hey guys, I've been here. Like, let's just keep going. Don't give up. Like,
have the conversation, what this means. Let's talk about it.
Yeah. And I think there's good perspective in that. And I'm glad that it's happening early on and not, later on, where it's going to build character for us and for anyone who's going through this.
I love your story because it reminds me of my own, right? So it's 2007, right? Some friend of mine says, "Oh, you finally lost enough zeros." Like, in the early 80s, I wasn't nearly as deep into investing. I wasn't a full-time investor. I had a job and I had some rental units and blah. But this was a full-time investor. It is 2007 and 8, and I had started losing enough zeros. And I remember sitting in a chair, right, going, "What the frick?" I mean, just right, laid out, right? I'm just like, oh my God, I'm losing $100,000 a month on my assets. I'm literally like, I don't know about you, but to me, $100,000 lost a month.
That's a lot of money.
Money. I don't know. Yeah. It seems like a lot of money to me, right? And and this is several months into this conversation, and I remember just going, maybe I'm just a loser, and I just need to fricking walk away. I just need to call it quits and admit that I'm not capable. And I remember the small voice in my head. And the small voice in my head said, "Christina, how are you going to feel when you're 80 and you chose to walk away? Would it be the right decision? Would you be proud of yourself? Is this the decision you want to make for the rest of your life?" And my answer was, heck no. Mm-hmm. No, I don't. I don't want to be 80 years old and look back at my life and say, I walked away at a time when I could be defining a greater self. And so I didn't. And it was a lot of freaking work. It was a lot of work. It was a lot of work to not walk away at that point with, a whole real estate portfolio, 300 doors and, variety of things out there that was and projects where I was in midstream on. I mean, that was a lot of work to straighten that out. Just saying. Yeah. But the small voice was the thing that said, no, it's not for me to give up. It's just not. Yep. I just got to show up and do it.
Mm-hmm. Yeah, I think a lot of people, their lives could look drastically different based on the answer to that question, will you give up? And I know a lot of great entrepreneurs who aren't good entrepreneurs. They just don't give up. It's just true.
I'm good at this, but just sheer.
Yeah, and maybe I'm one of them. Time will tell how good of an entrepreneur I am. But to be honest, I definitely got the don't give up factor, and so that's gonna at least give me. It's got me this far.
I think I'm the same. I'm not sure how good I actually am, but I know that I'm tenacious.
Yeah.
There's a saying in the spiritual group I belong to: spirit meets you at the point of action. Mm-hmm. And if you keep showing up, spirit's going to keep showing up. Something unhinges, something shows up. I mean, they call it where God closes the door, he opens the window, right? And it's like spirit meets you at the point of action. If you don't give up, something opens. Yeah. Something happens, something becomes a something. And, it's just, to me, I hold that so close to my heart. Like you said, maybe we're not really that good, yeah. but we're determined. And, and spirit keeps showing up, or grace keeps showing up, or the world keeps showing up. So, all right, so let's round this out. So if real estate is both rewarding and difficult, which we both have distinct stories of, why continue to use real estate to break through to your financial freedom?
Yeah, well, I think there's something to distinguish here too. I make my money both on the business side of real estate and on the investing side of real estate. And I think that's important to note here, is that I'm not taking risk as an investor, I'm taking risk as an entrepreneur. So everything that's risky about these deals right now, we as a company are taking the risk on, not our investors, meaning all of our hard money in pursuing deals is our own capital and our investors' capital. Where we bring them into is finally when we close the deal, we execute it, now our investors are in and we can predictably build wealth through real estate. And I think that's why real estate is still an incredible asset, given where we're at right now. That's where smart money goes in a recession. It goes to hard assets. They go to things that hold value, right? It's where no matter what happens to the dollar, if you're holding hard appreciating assets that people are willing to pay for, you're in a great place. And I think that's why I love real estate. It's predictable. We can predict where things are going based on supply and demand, right? It's fundamentally sound. So I think from an investor standpoint, that's what I mean. And that's why we will continue to invest in real estate. And so I just make that distinction but I'm also on the active side of the business putting together deals, which is a lot more risky, right? Which is more entrepreneurial. Mm-hmm. And if you don't want to do that, then stay passive. Trust me, it's a whole heck of a lot easier.
It really is. It really is.
Just saying. But at the same time, like, I love this side too. I love the active side. Like it's an incredible business. It's very profitable. Or it can be very profitable, and it allows me to interact and do business with people I really love and enjoy. And there's a lot of incredible people in this industry that I love to do business with and cross paths with. And it's become a real home, I guess. And so it's been something I've really enjoyed, being in this industry.
What does financial freedom mean to you?
Options. The option to, you heard my daughter crying earlier, work from home and go upstairs and have lunch with her. Is the options to be a part of masterminds and go travel. It's the option to be able to have my wife leave her job and come work for us, and for us to spend more time together. It's the option to travel to North Carolina this summer and get an Airbnb for my family and for us all to be together while I go speak at a real estate conference, right? Like, it's options, and it's the options to be able to support the ministries that we want to support. So really simply, that's really what financial freedom means to me.
How do people get a hold of you, Ellis? If they want to invest, they want to...
go to Symphony Capital Group. Right. Go to symphonycapitalgroup.com. That is definitely the best place for investors. Really easy to kind of join our investor community there and get access to our offerings. And then I am on social media, Instagram and YouTube. Just look me up, Ellis Hammond, and I produce just a ton of content for investors who are I just produce a lot. So I would say those are probably the best places to find me personally. But definitely Symphony Capital Group if you're interested in investing in future deals with us. And I think it's a great time. I think if you have capital, and you do have money sitting on the sidelines, and you can take advantage of what's coming, there's going to be great opportunities for those who can take advantage of it. Like, cash will be king over the next 6 to 8 months. And so if you have cash and you don't know where to go look for opportunities, then you're going to miss a great opportunity. So align with people like Christina, align with people like me who know where to go find and look for the opportunities and can say, hey, we got one, it's time. Because, without cash, we can't close on the opportunities, and without the opportunities, you can't do anything with your cash. And so we do need each other in this time. And so we'll look forward to meeting anyone who's interested in that.
And also, just real quick, right? Your Kingdom REI.
Yeah, we have a free Facebook community actually called Kingdom Real Estate Investors. If you're an active or passive investor and your faith is important to your business, go to check out the Facebook group, Kingdom Real Estate Investors, and it's a community that we're growing. We do have a back-end mastermind on that as well. That's kind of a paid thing, but anyone who's just looking to get involved or be around other like-minded people, our Facebook group is probably the best place to go, and that's Kingdom Real Estate Investors on Facebook.
Thank you so much, Ellis. So wonderful to have you here at Symphony Capital Group. I am Christina Suter. This is Real Estate Breakthrough. Tune in every 2 weeks. We have a fresh show for you. iHeartRadio, Spotify, and a variety of other platforms, as well as YouTube and Roku TV. You can find Real Estate Breakthrough. Thank you so much.